Welcome to Investors Insights. Today's topic is the consumer in charge. This week we've got a lot of data, a lot of information to look at, but really we're focusing on the consumer who is taking charge of the economic markets this week with a lot of information, a lot of important data points that we think will impact your portfolios and the economy at large. I'm joined today with Adam Van Zandt. Bobby and Greg are in meetings, so can't join us. So you've got us today to go over what is going to be a very interesting week. And so let's get to it. So this week, we've got two main points from economic data that really focus on the consumer that we think will drive the markets. The first out is the CPI, that's the consumer price inflation. We believe that may be higher than expectations, and we're seeing that impact interest rates, and that when interest rates go up, bond prices go down, and so we're seeing that potentially impact our clients' portfolios. If inflation goes high for too long, then that may be negatively impactful to individuals' ability to purchase goods, but also negatively impacting the value of the more conservative investments within portfolios. In addition, later in the week, we're getting data on retail sales for the month of March. Expectations are for a 6% spike, and the reason that's such a large spike is that March we saw another wave of government checks going to the consumer. The average person receiving $1,400. When we saw that back in January, we saw a spike in retail sales. We're expecting a similar spike for March. This could also push prices higher again as the consumer gets out there and spends money. Last year, most individuals in 2020 saved the government transfer checks and invested those. So we saw that go into the market. We saw prices go higher for equities. This, we may see people spend instead of save those checks, which could cause prices of consumer goods to go higher. So a lot to watch and a lot of really long-standing impact of just a week's worth of data. And so, to talk about how that we're seeing that in the market, Adam, you had some really good information this morning on just the pure numbers of the stock market and how things are looking.
Yeah, thanks, Trey. I appreciate it. And just want to talk about the S&P 500. Its close came in at 4,128 on Friday. That pushes our new resistance level to 4,170. Also pushes our new support level to 4,080. I want to talk a little bit about the 50-day moving average. And, we talked about that over the last month or two. And I do want to kind of clarify that 50-day moving average is not calendar days, of course. It's actually based off of the market being open. So that 50-day moving average has finally pushed over 3,900, currently sitting at 3,914. Back to your point, Trey, it's going to be a very, very important week to look at these retail sales and see where we're going from that standpoint to see if we can keep this bullish tone in the market.
That's right. The consumer coming back should help earnings, should boost the earnings of the stock market, which should help push prices of the stock market higher. So a lot of big data this week that will push into the rest of 2021 to see how things are going. Can we sustain these higher prices that Adam just pointed out in the stock market? A lot of that's going to be driven by a safe and healthy consumer, which then pushes earnings up, which then pushes prices up. So all in all, a very big week, something we're watching very closely. Again, we're watching the consumer price index for inflation, see how that may impact interest rates. We're going to watch March retail sales to see how healthy the consumer is. That's something we're watching to see how the rest of 2021 may play out. We hope you found this informative and helpful. Please, we always appreciate it when you share it with friends and family on Facebook, LinkedIn, and Twitter. If you have any questions, don't hesitate to call us. I hope you have a great, safe week. We'll see you soon.